Hello and welcome. You are watching Property Hotline with me, Kavita Krishnan. Joining us on the show today is Vinay Singh. Vinay is a legal and tax expert. He'll help us understand all the questions that you have related to tax in buying and selling properties that you've already purchased or would want to purchase in future. Vinay, welcome to the show. Let's start with this email query now. It's coming from Mikhil Kumar Gupta. Now, Mikhil Kumar says that he purchased a flat in Panvel and the builder is asking him to pay service tax at 4.5%, MVAT at 1% of the agreement value. Now, he paid the MVAT through check to the builder. Builder issued a receipt, but he wants to know if budget houses are exempt from service tax. Budget houses, I'm assuming from this he means affordable homes as per the definition of the government.
Yes, indeed. Actually, there were two different types of abatements available earlier. But from 1st April 2016, there is a standard abatement of 70%. So effectively, 30% of the value gets charged at 15%, which works out to 4.5% as the rate. So yes, the builder is entitled to charge you service tax and of course VAT at 1%, and both of which you have to pay. There is an exemption of where there is an approved project under the Ministry of Poverty Elevation, where your flat size or unit size is up to 60 square meters. But that has to be an approved project, so it would not by itself apply to all flats which are small or affordable housing and so on. They have to be specifically approved by that ministry.
So essentially you need approval from the union government or from the state government that yes, this particular project and the scheme that we're looking for over here is essentially the PMAY or the Pradhan Mantri Awas Yojana. Only if a project technically comes under that, then they are eligible for approval. Am I right, Vinay?
Yeah.
So you need to check whether it comes under PMAY. Only then can you get that abatement. Moving on, we have a caller now from Visakhapatnam. Uday Bhano has called in. Uday, what's your question?
Actually, ma'am, I wanted to ask you, actually, suppose if a piece of land is given for development, so what are the tax implications for the person who is offering the land to the developer?
Okay, if I have a piece of land and if I hand it over to a developer for development, what are my tax implications?
Well, this has been the subject of much controversy in taxation, for the simple reason that even though there are redevelopments all over the place, there is TDR, the Income Tax Act does not specifically address development rights and TDR. Having said that, let us give a very simple answer. If you are going to enter into an agreement to hand over your development rights, and either you give a power of attorney or you signed and registered your agreement, plus you have also given possession. The judgment seem to now suggest that if you have, even if you've given a power of attorney granting all rights coupled with possession, it would amount to a transfer. That is the point of time when capital gains would arise, whether or not you have received the consideration. This is the general trend. So you will find that you will have to pay tax on the amount that you get. If it is not amount, sometimes you are asking for a certain built-up area to be given to you. Then built-up area, whatever is the cost of construction for the builder, that would be considered as the consideration in your hands, and it will be taxed accordingly, long-term or short-term, depending on your holding period.
Now, Vinay, a lot of times, and we're seeing that increasingly happen now, developers do not want to buy land. They choose to execute joint development agreements where the landlord is still has authority over the land, the original owner of the land, and the development rights are passed over to the developer, and then the person who owns the land stands to get a share in the profits or in the revenue in that particular project. So in that case, since there is no physical transfer of land, what are the tax implications?
Well, it's the same thing that I just said, that once you are transferring rights, development rights upon your land, then either you are receiving cash, in which case it's not a problem. But if you are receiving, say, constructed area, then the constructed area, the cost of construction is what will be assumed to be the consideration in your hands, and that would be considered as the sale price minus whatever is the cost of the land that you are granting the rights over. That would be your chargeable capital.
And when do I have to really pay this tax? Because if I'm handing over land today, say I've entered into a joint development agreement, by the time that is actually developed and sold, and when I'll actually start getting that money, it could take anything between 3 to 5 years. So when do I have to pay the tax on that?
The problem with this is you have to structure your agreement very carefully. It's a very complex subject. That is why I gave a very simplistic answer that if you have done the agreement or POA and handed over possession is taxable. But you could structure it in such a way that at the present juncture, while you are giving certain rights, you make sure that the transfer is not being effected. You must put that into your agreement, and therefore you could defer it by say 2 or 3 years till finally the builder has constructed the area and is ready to sell, and therefore you can at that point of time receive the money and pay your taxes.
Right, Uday. What seemed as a simple question obviously turned out to need quite a complex answer over there. But very simply put, the minute you hand over land or the development rights, it constitutes a transfer in the books of the tax authority, which means you need to pay tax on that, you need to pay capital gains on that, and capital gains are calculated on the basis of the sale proceeds, the money that you get from the sale or the money that you get because of the transfer of development rights, that is whatever profit you will get once that property is developed. Now, how and when to structure your tax payments for that, since it is a big deal, it does involve a huge amount of money, it involves land. The best thing that you can do is go contact a lawyer, a tax lawyer preferably, and sit with the lawyer and draw up those documents. That way you will ensure, you'll be able to ensure that your share in the revenue is protected and that your interests are protected, especially when it comes to tax. Moving on, we have Nishit now who's called in from Mumbai. Nishit, how can we help you?
Yeah, can I, Mr. Vinay,
Yeah.
I have 2 adjacent flats and I want to sell them. So, which will be the best option under Section 54 for me to invest?
The way I see it, Nishit, is that if you are selling both and you're investing it in one residential property, that would be the best thing that you could do. Because as of now, it is not possible for you to save tax by investing in more than one property. So selling 2 is not a problem, but buying one would be the right thing to do. And if your capital gains get reinvested here, then there will be obviously no tax implication at all.
Is there any limit?
No, none. No limit.
Means if I purchase a flat and then I sell it off, so will my capital gains again will be taxable or something?
No, see what will happen if you sell these 2 flats, say for 2 crores, but your capital gains works out to 1.5 crores. You need to invest 1.5 crores under Section 54 in another residential property. And for that you get 2 years time from the date of sale if you're buying, or 3 years if you're constructing. So if this is prospective, you can also do it 1 year back. So any of these are the time limits that you have to look out for. And of course, if you have not purchased within or constructed within the required time, only then will there be a tax impact. So you plan it in such a way that you sell, and literally back to back in a matter of a few months, you purchase or construct whatever you like.
So Nishit, essentially what you need to remember is 2 years is what you get if you're buying ready property, if you're reinvesting in ready property, and you get a 3-year time period if you're going to reinvest in an under construction property. And Vinay, just to make it clearer, when we say 3 years, does that mean that he needs to get possession within those 3 years?
Well, so see, he needs to construct his own house within those 3 years.
No, I'm talking about, if I were to buy a flat in Mumbai, then in that case, do I need to get possession of that flat?
Technically yes, but there are Bombay High Court judgments which have made it very clear that if as a taxpayer you have done your duty and for reasons beyond your control that time limit has been violated, then also you will still be entitled to the deduction, because this is a beneficial provision built in the Income Tax Act. So courts tend to take a much broader view of the provision and not go strictly by the letter of the law.
Right. Moving on, email query next. We have Sanchit Laktakia. He wants to know if the builder can charge service tax on under construction property. Now the builder is charging him service tax on the property purchased 3.5 years earlier. Possession of this was due in 2017. 2 disbursements are to be paid. 1.5 lakh rupees as service tax has already been paid. Total value of the flat is 37.49 lakh rupees, including the service tax. What, is he liable to pay that service tax?
Yes, absolutely he is liable to pay. The current rate is 4.5% regardless of what is the size of the flat and what is the value of the flat. So on these installments, you will have to pay 4.5%.
Right, so you will have to pay that 4.5% service tax. And also, just to make it a little more simpler, Vinay, we get this query a lot of times. we have people writing in and asking that, my developer is asking me to pay service tax on every installment that I pay him, or VAT on every installment that I pay him, TDS on every installment. Could you just break that down for us?
Well, yes, as far as the service tax is concerned, whenever you are making a payment to him, there will be a collection of service tax by the builder from you, and which you will have to pay. At the same time, VAT also is payable. So 1% of the VAT amount will be collected from you. The third thing is that you have to deduct TDS every time you make payment to him, provided you meet the criteria, which is your property value is not agricultural and the value is more than 50 lakhs. In which case you have to deduct 1% whenever you make a payment to the builder and deposit the amount.
Right. So very, very important thing to remember, if you're buying under construction property, not only do you have to prepare yourself to pay the installments to the developer, what you also need to consider is that alongside these installments, you also need to pay service tax, you need to pay VAT, and you need to pay TDS on every installment that you're paying the developer. So you need to be prepared to shell out that amount of money. We have a question that's come in from Avinash now through email. He says he earned long-term capital gains after selling residential property in Pune. He now plans to reinvest his gains in another property. He wants to know whether he can purchase a commercial property, Vinay, or a farmland with the money he has earned. So, sell a home and buy what? That's a question.
Sell a home and invest in a residential house. That is what will grant you the exemption. In your case, under Section 54. Or the other section is where you sell a asset which is not a residential property. Again, the benefit is available to you provided you buy a residential property. So this is what is the most important thing. Unfortunately, for commercial, definitely you will not get any benefit. Now, when you say farmland, if it's a house along with the land and you say that you are going to live there, then if it can be considered as a residential property, then yes, you might be able to set that off.
Okay, so if you intend to use that land to build a home, then you can set it off. Essentially, whatever be the nature of the property that you sell, it could be a shop, it could be an office, it could be a home. If you intend to take the benefit of long-term capital gains tax deduction, then you have to reinvest the gains in a residential property. We have an email query now. Rajesh Srivastav says that he owns property in Pune. Registered in February 2012, got possession in October 2016. Now he wants to know, which year should he take into consideration to compute capital gains tax? That's a favorite, Vinay.
Yes, it is. Well, since you have already taken possession in October, you will have to start counting the 3-year period from the date that you took possession, and then it will turn into a long-term asset. So my advice to you would be, if you intend to sell it and you envisage that there will be significant gains once you sell it, then it is better to wait out the 3-year period, because short-term capital gains tax can be pretty heavy.
Okay, so wait, the verdict is wait out for the 3-year period and then pay, ensure that you can benefit from long-term capital gains deduction. We have an email query now from KR Natrajan. He plans to invest in an under-construction project in Mumbai. Now, the developer is asking him to pay a service tax of 4.5% on the apartment costing 85 lakh rupees. Natarajan wants to know whether or not it is valid. We've already answered it, but let's have a go again.
Yes, well, we've answered it, and 4.5% is the uniform rate at present. So you will have to pay that on the 85 lakhs, which is the consideration.
You know, Vinay, I also think that a lot of these questions are also coming because of the Delhi High Court order on service tax. In fact, we've had callers on the show who've asked us outright, why should I pay the service tax? Since the Delhi High Court has ordered saying that, there is a problem with the computation of service tax. So should I just say I will not pay it? What should buyers do currently?
Well, since this is a Delhi High Court order, first thing you must remember it that people who are residing in the territory covered by the Delhi High Court can probably take that stance that I will not pay. People who are not in that geographical region will not be able to take this stance because you are not covered by this particular judgment. So I am sure nobody wants to litigate against the department. I mean, for example, sitting in Mumbai, you can't litigate against the department. It's a very tough call to take. Secondly, even this decision of the Delhi High Court may be challenged by the department. There may be an amendment in the law, maybe in the forthcoming budget. So with all this uncertainty, if you do want to contest, then you'll have to really take a call whether should you pay it and then contest, or are you willing to take that chance to contest now and then maybe later on find that you're being asked to pay interest, you're being asked to pay penalty. So fighting with the department is not an easy task. You will have to take proper legal advice, understand the implications of what this fight will lead to, and then take a decision in the matter.
Right, and for all those viewers who've not really followed what the order was, essentially the Delhi High Court ruled in the favor of a buyer here. The buyer had actually brought a case in court against the developer, not against the tax department, asking why he should be paying service tax. The High Court in its order, the High Court essentially said that there is a problem with the way service tax is computed. The math is wrong because there is a lot that is not really covered by service tax when you buy a house. So, for instance, preferential location charges, etc., do not really come under the purview of service tax. The service that the developer is rendering over here is merely constructing the house and giving it to you. Land cost, for instance, should not be computed when you are calculating service tax, which is why the Delhi High Court ordered that residential property, sale and transfer residential property should not be covered by service tax. However, this is something like Vinay just pointed out, this is a Delhi High Court order, not necessarily valid across the country. The other thing is there is a chance that this order will be challenged in court, which is why you will be taking a chance if you choose to take a stand and not pay service tax. The better thing to do would be to pay the service tax and move on. Right? We are joined in now by Rajshekhar from Bengaluru. What is your question?
Madam, I have taken in a flat in Bangalore, 37 lakhs something.
Okay.
He has putting a 3.24 lakhs in taxes. Which tax I don't know, madam, this one. The builder has made two agreements. One is sale agreement, one is construction agreement.
Okay.
Which portion I have to pay, madam, tax?
Right. But that is the practice that is followed in some parts of the country, isn't it, Vinay?
Yes, especially in Karnataka, the way the builders go about it is that they enter into an agreement which turns them into your contractor. So essentially they sign two agreements with the flat buyer. One will be to say that we will procure labor and materials, etc., and construct the flat for you. Now this is clearly something which is amenable to VAT as well as to service tax. So this is the agreement where you will end up paying both. The second agreement that the builder signs with you is to sell you an undivided share in the land in proportion to your flat vis-a-vis the total area available. Now that is a transfer of a share in the land to you. So therefore neither VAT nor service tax is payable on that particular agreement. So this is the position as far as Karnataka is concerned.
Also, he said that he has been asked to pay 3.24 lakh rupees as tax on a 37 lakh rupee flat, but he's not very clear as to what tax this is. Is it possible for you to tell him what tax this probably could be?
Service tax would be 4.5%, and I think in Karnataka your VAT rate is 5%. So it should be a 9.5% of your total value of that particular agreement, where you are saying that he will construct for you.
So just to reiterate, Vinay, very quickly, could you run us through all the taxes that buyers need to pay when they buy a home? And this is very, very essential. Remember, when you plan to buy a house, it is not just the cost of the house that you need to be prepared for. You need to be prepared to pay all these taxes which are not covered by a home loan. Vinay, what are these taxes?
Well, I'll start with stamp duty because that's a significant proportion. In certain states, even the registration charge becomes a significant proportion because it would be of, say, flat 1%, like in Karnataka. So that's the second thing. You also have to pay service tax as of now, and you also have to pay VAT, though VAT may not be payable in every state. So you will have to check, like for example, Noida, etc., does not levy VAT. So you'll have to check. And of course
TDS.
And of course the last thing is that you have to deduct TDS and pay it to the government. Now this is a little dangerous situation because if you are a little lax, you will find that you are being asked to pay interest, you are being asked to pay late fees. So my advice to you would be take professional help and make sure that you do not default on this deduction of TDS and the deposit with the government.
Right. And TDS, remember, has to be paid within the 7th of the month, which means even if you are buying property, say you execute the sale deed on the 30th of this month, you are technically getting only 7 days or 8 days. If it's a month with 31 days, then you're getting around 8 days to pay that TDS, which amounts to 1%. So net, you're looking at something like 10% of the cost of the flat, which you pay as taxes?
Yes.
So that's what you need to be prepared for. Almost 10% of the cost of the flat, which will go in taxes, that comes out of your pocket. Plus, you have to be prepared to shell out 20% because no bank is going to give you a loan that is more than 80% of the cost of the flat. So be prepared with at least 30% of the cost of the flat and then go out looking for a flat in the market. We have Ravi, who's sent in a question through email now. Ravi says that his father passed away recently, and Ravi inherited the property. Now, the property was purchased in 1968. It might undergo redevelopment. He wants to know whether he can hold the property jointly. He also wants to know if he is liable to pay any service tax on the sale of the property. He owns 2 more properties in Mumbai and wants to know the tax implications. A whole host of questions. Let's take it one by one. Can he hold this property jointly? He's inherited this property.
Yes, well, so if he's inherited, there's absolutely no problem. You are, in fact, holding it jointly, whether you like it or not. So there is no choice in the matter here. And you are entitled to legally hold it jointly, no difficulty on that count. There is no service tax payable by you when you sell. This service tax is charged by a builder and a buyer needs to pay that only when he buys it from a builder. In resale cases, there is no service tax which is applicable.
Okay, and he also wants to know the tax implications because he technically holds around 3 flats. He has two more properties plus this one that he inherited from his father.
Well, we are proceeding on the premise that all of these are residential properties. So it does not matter. I mean, if you are holding 2 properties which are residential and now an undivided share in a third one, it makes no difference whatsoever so far as capital gains tax is concerned. It will make a difference insofar as your regular tax returns are concerned, because one would be free of tax and the other 2 you will have to offer tax on a notional income basis.
Right. And now we have a caller who's joined us on the phone line, but he's chosen to remain anonymous. Go on, tell us what's your question. How can we help you?
Yeah. Good evening, Mr. Vinay Singh.
Yeah, evening.
I had purchased a flat in 2011. The agreement registered in 2011. The possession of the flat is next month, and the builder has already got the occupation certificate 3 months before. So the balance payment what I have to make on the possession, do I have to pay service tax on that?
Well, no, if the occupancy certificate has already been received, then after that date you don't have to pay, but up to that date, yes, you will have to pay.
On the
Okay.
balance, I don't have to pay, right?
No, you don't have to.
You don't have to pay it. You only have to pay that balance amount and you can move into the flat. You can take possession of the flat.
And the second query is that this flat, suppose after taking the possession, hello?
Yeah, we are listening.
After taking the possession, if I sell the flat, will I be in a long-term capital gain or a short-term capital gain?
See, if you have any thoughts about selling the flat at the present juncture, then my advice to you would be that do not take possession now. Because at present, it is a right to a house property. It is not a house property, till you take the possession. So you have been holding on to a right for 3 years. You could sell that today. And you could say that I've been holding on to this for 3 years. So, it will be a different class of asset. The minute you take possession, it becomes your house property. Once it becomes your house property, your 3-year period, computational period, commences from the date you take possession.
But the builder has a lock-in clause, like I cannot sell the property till I take the possession.
Well, you will have to discuss this with him. If you are able to convince him to, technically you don't need his permission, okay? Because he has sold the property to you, there is nothing that legally he can do. But they exert some different kinds of pressure, like maybe, he'll create trouble while forming
Or he might ask you for a humongous transfer charge, which is the case. So essentially, you need to take the builder into confidence before, because there is a clause to that effect in your contract. right?
I understand. Thanks a lot.
Well,
Welcome. So, before we move on, Vinay, very quickly, you said it is the right to own property.
right.
So, we also hear of a lot of, projects, especially those that are sold by housing development authorities, where you get an allotment. You actually get the final property, you sign the agreement, you can register it once you get possession of that. In all of these cases, when is capital gains actually computed from?
See, even if you see the case of authorities like MHADA, etc., they may do an allotment, but you are bound to pay stamp duty. You are bound to register those properties. So that is not a problem. The question arises is that once it is ready and you have taken possession, so you are now owning a house from the date you have taken possession. So you count the 3-year period from that date.
Okay. So that's what you need to remember if you're computing long-term capital gains tax. Either you do not take possession and you count the 3 years where you had the right to own that property and sell it before you take possession, or what you do is take possession and then wait for 3 years and then sell the property. We have Uday Banu who's called us from Mumbai. Uday, we have just about a minute left on the show. Be very quick. Tell us what's your question.
Yes.
Yes, Uday.
Yeah, good evening, both of you.
Good evening.
I am from Mumbai.
Yes, go on. Tell us what's your question.
Mumbai. My question is, if I buy a flat costing around 65 lakh rupees, what are the taxes I have to pay?
If you buy a flat costing around 65 lakh rupees, what are the taxes? Is this a resale flat or a new flat?
New flat, brand new flat. It is under construction flat.
Okay, it's an under construction flat, and this I assume is in Maharashtra and Mumbai?
I'm in Mumbai.
Right. Vinay, you've got all the information you need. Go on, tell us.
4.5% would be the service tax payable by you, 1% would be the VAT payable by you, and the stamp duty, which will be again 5%.
So that's what you need to pay: stamp duty, VAT, service tax, plus you also need to pay the TDS, which we keep reminding all people who call into the show. Remember, TDS is essential. It is 1%, which seems very little compared to all the other taxes that you're paying. But if you choose not to pay that, or if you delay the payment, then you have to end up paying a hefty penalty. So you're better off paying it, and you have to pay that 1% TDS within the 7th of the next month. So if you're making that installment, and know that since you told us it's an under construction flat, remember you'll have to pay all these taxes on every installment that you'll be paying the developer. Okay? You need to keep that in mind. With that, we've come to an end of this episode of Property Hotline. Vinay Singh, thank you very much for coming in and answering all those questions. And we'll help you with all answers to all queries related to real estate. It could be buying, selling and investing in real estate. It could be legal issues, taxes like those we answered today, or home finance. Call us, write into us, or personally tweet to me. I'll make sure that all your questions are answered by the country's biggest experts. Thank you for watching Magicbricks Now.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.